Hello and welcome to another update video about AVAX. We have something to talk about because there has been some movement. The price got rejected in the upside Fib area there, in the Fibonacci target area at $33, okay? $33, that's the 1.236 extension of the initial potential 1-2 setup here. And that's a problem, and I'll talk about it in this video. Before we dive into the micro and talk about the micro patterns, let's discuss the bigger picture, just so that everybody's on the same page. We have a bullish scenario, which will be invalidated below $8.70 or $8.65. That's the invalidation point. That's the October low of last year. Do I say we have to test it? Absolutely not. Do I expect it to be tested? No, at least not in this bull market. But that's currently the expectation. I don't expect the yellow box to be broken, actually. But the market could still do it. But at the moment, that's just not what I'm watching for. Still, I need to highlight the invalidation point, the formal invalidation point for the bullish 1-2 setup. Already below $13.40, yeah, I would change my expectations. So that is the level that keeps us safe, $13.40. Any break below that critical 78.6 retracement would rather indicate that we have already topped in probably something that will lead to new bear market lows, because below the 78.6 retracement, I cannot call that really a wave 2 pullback anymore. Well, it could be just technically, however, it's just not likely, because most wave 2s would finish before breaking that level at $13.40. Any sustained break will suggest new bear market lows, but we're not even close. Okay, so at the moment, expectations are for a bullish outcome here and a rally in a third wave, which would break above the March highs, so above $66. Looking at the shorter time frame, the question that's often around when we're talking about possible trend reversals is, did we bottom already, or is there one more low coming? So what we need for a first confirmation that we've bottomed and that the risk for one more low is reducing significantly is a first 5-wave pattern. And that's indicated here by the white count. Wave 1, wave 2, wave 3, 4, 5. We need, therefore, another 4-5 pattern. And the Elliott wave analysis dictates which Fibonacci levels need to hold for this roadmap to remain, let's say, a likely pathway. So to watch for a 4-5 pattern makes kind of sense as long as we're holding $27.44. We know that below that level, probabilities for a bullish outcome will reduce for a 5-wave pattern, okay? Now, I have to say it's already problematic because the third wave, while it appears to have been quite dramatic, it only reached the 123.6 extension at $33. That is a weak third wave. It technically fulfilled the bare minimum expectations, but really I normally call the 1.38 extension level the minimum because it's the first ideal target, and anything that's not ideal is, yeah, it might still work, you know, it might not work, you know, there's no, it's just, we have to pay attention then also to a short-term bearish scenario more, right? So had it reached the 1.38 or even the 1.618, it might be worth to trust this pattern a bit more. Now that we haven't even reached the first ideal target in a third wave, makes me definitely question this white count that we've bottomed already. Okay, so it's an early warning. The next warning will be a break below $27.44, and that's when clearly the yellow count would be in control until the market proves something different. And in the yellow count, we might see one more low to 1880. Remember that the 1880 level from the beginning was the ideal target in this correction, because it is not only the golden ratio level, the 61.8 retracement, it's also the so-called 100% extension on the way down. So we missed that, yeah, when we dipped into this trading area support zone, but that's okay. I mean, it still reacted to the 50% Fib level. As long as we're turning around before breaking below $13.40, fine. But here, obviously, this is also an analysis of the microstructure. And really, in an ideal Elliott wave world, we would have seen the price get to 1880. Now it didn't do that. That's fine. Okay, it doesn't have to. There's nobody telling the price what it has to do. But still, this is all about what are the parameters. Now, the fact that it didn't get there, maybe that's holding the price back a little bit on the way up. Sometimes the case. Either way, the parameters are clear. We need to hold 27.44 in the short term to follow the white count. One more high should send us at least to 34, better to $36. But be on the side of caution because the third wave was weak. So chances are that this was only a B wave top in the yellow count, and we might come down once more in wave C of Y to test 1880. But then I would expect from there an attempt to rally again. That's my update about AVAX. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.